Hello, everybody, and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today, we are going to be revisiting Norwegian Cruise Line stocks, and I'm taking profits in this one. As always, this is not individual investing advice. This is just how I analyze stocks. So I made a video, excuse me, I made a video on May 27th of last year. So I'm going to get as close to as I can here on the fast graph, like May 24th. Okay, so, and I thought we could get a double in this one, honestly. It's up about 40%, we'll call it, since the video came out. We sold this one yesterday in the full Cyclical Investors Club service, but since I had made a public video on Norwegian, I thought I would let everybody know what was going on, right? And so recently we've had a few changes. I was really hoping we would be able to get a double by next year. But we can see the stock price since the end of last month is that it's down 20%. So the reason I think for that is a handful of different things. The first one is consumer confidence is just down. I mean, cuts in government, people losing their jobs in the U.S., just general kind of uneasiness has really kind of knocked consumer confidence down. And in the last consumer, I don't know if it's called a consumer confidence report, but it showed that the main thing people expected to cut back on in the second half of this year were vacations. So that actually drove a lot of the sentiment. And so I saw that, considered selling it last week, but then I saw they were reporting earnings on this Thursday, and I thought, well, I'll wait and see if they have like really great guidance or something. Maybe the stock will go up. They didn't. It was pretty weak. I mean, it wasn't like a huge miss or anything. The stock price definitely fell afterward, and then I think everybody's just kind of getting jittery on the consumer overall. And this was always a little bit of a risky bet, but I thought the trend we had before would keep going, and if it did, then these guys would be able to do what Royal Caribbean did, which was fully recover over here. So, and there didn't seem to be like much downside risk. When we bought it last summer, there wasn't a whole lot of like recession risk at the particular time. That's gone up a lot, I think. And forward-looking indicators are not looking great. Atlanta Fed is forecasting negative GDP growth for the first quarter. So, and then there's just general kind of anxiety. You can see it in the market action this past couple weeks. You notice it when markets open okay, and then they fade as the day goes on. And then on Fridays, you'll see a sell-off. You won't see a sell-off. You'll see short sellers taking their positions off. And then at the end of the days on Friday, you'll see kind of this spike up. That's just short seller probably. I mean, you never know exactly what's that. That's most likely short sellers closing their positions for the weekend. So, they can go chill or whatever, not have to worry about any news headlines over the weekend. And then they can come back on Monday and they'll probably put those back on. That's what you see in bear markets. Like that's what you saw in 2008. Pretty similar. I mean, I don't remember exactly all the price action from 2000 and 2000 to 2002, but definitely this was what it was like in 2008 and 2009. So that's kind of just what it feels like. And this is directly tied to that. In addition to Norwegian, and since I know I made recent videos on quite a few of these, I just thought I'd mention, I didn't sell all of them, but I did trim kind of anything in my portfolio that relies on government contracts. And so if I liked the businesses, I held on to them. I didn't sell anything fully except for Norwegian, but Cigna, Elevance, Lockheed Martin, CACI. I've made videos on probably all of these recently where I had kind of whatever I said there. I would say I'm more cautious now just because the administration looks very serious about just drastic cuts. So where I thought maybe they would back off, maybe it was like kind of, we'll just wait and see what happens. Now it looks like there's just full bore kind of cutting, and they seem really committed to it. I see zero sign of any changing of minds going on. So at a certain point, you have to, even though I hate reacting to like news and stuff in the market, I even hate reacting to like policy stuff. You just have to kind of take it seriously, right? So I didn't run out and sell everything, but I trimmed everything by about half, and I just plan on holding the other half, no matter what happens. It wasn't a huge change. All this together was about 3% of the portfolio. And that'll probably be one of the last adjustments that I make. There could be one or two more, I guess. But if it's clear things are, deteriorating in other areas. But yeah, it doesn't mean I'm not going to buy anything. When things come up to buy, I'm still going to be buying them. But you have to kind of just adjust with the times. And, if you have something that's a little higher risk, like a cruise line, which is already reasonably high risk, and you have a good profit in it, it doesn't hurt to go ahead and just take those profits, wait and see what happens. And then if we can get good prices on some other stuff, we'll definitely be buying if they get any cheaper. So that's kind of where we're at right now. And if you have any questions, put them in the comments. I'll answer them. And I'll see everybody later. Bye.